Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is May 16th, 2025, and we're diving into iPower's fiscal third quarter 2025 earnings report. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. iPower, a tech and data-driven e-commerce services provider, has just released their Q3 2025 results. It's an interesting report, especially given the current market conditions.
Revenue and profitability overview. Let's start with the top line. iPower reported a total revenue of $16.6 million for Q3 2025, a significant decrease from $23.3 million in the same quarter last year. John, what are the key factors behind this drop?
The decline in revenue is primarily due to lower product sales to their largest channel partner. However, it's worth noting that their SuperSuite supply chain offerings have shown growth, which partially offset the decline. Despite the revenue drop, iPower managed a gross profit of $7.2 million, maintaining a gross margin of 43.3%.
And what about their profitability?
iPower reported a net loss of $0.3 million, or $0.01 per share, compared to a net income of $1.0 million, or $0.03 per share in the year-ago quarter. This shift to a net loss reflects the challenging market conditions and reduced sales volumes.
Operational efficiencies and future outlook. Despite the challenges, iPower has made some operational improvements. Can you elaborate on these, John?
Absolutely. iPower has improved its operating expenses by 15% this quarter, thanks to optimization initiatives. They've also reduced their total debt by 43% to $3.6 million, which is a significant step towards strengthening their balance sheet. Additionally, their SuperSuite business now represents 20% of their total revenue mix, indicating strong demand for their supply chain solutions.
What does this mean for their future outlook?
With ongoing efforts to diversify their supply chain and the growing momentum in SuperSuite, iPower is positioning itself to navigate the current market environment effectively. Their strategy to build a more agile and resilient supply chain is crucial for long-term growth.
Management commentary and strategic initiatives. Let's discuss the management's commentary. What insights did CEO Lawrence Tan and CFO Kevin Vasily provide?
CEO Lawrence Tan highlighted their efforts to diversify the supply chain by expanding manufacturing into the U.S. and building relationships with alternative suppliers. This is part of their strategy to reduce exposure to external volatility. CFO Kevin Vasily mentioned the 10% improvement in operating expenses due to optimization initiatives, which is a testament to their commitment to operational efficiency.
How do these initiatives align with their long-term strategy?
These initiatives are central to iPower's strategy to build a more agile and resilient supply chain. By focusing on operational efficiencies and diversifying their supply chain, they aim to support long-term growth and deliver greater value to their customers and shareholders.
Key takeaways. In summary, iPower faced a challenging quarter with a decline in revenue and a shift to a net loss. However, their efforts in operational efficiencies and supply chain diversification are commendable. John, any final thoughts on iPower's investment prospects?
iPower's strategic initiatives and focus on their SuperSuite offerings position them well for future growth. While the current market conditions are tough, their long-term strategy seems promising. Investors should keep an eye on their progress in these areas.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on iPower's performance in the comments below.